Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical structured zone for this market. This area, in fact, was acting as previous resistance here, preceding all this rejection to the downside. Again here, the market tested its zone and rejected it to the downside, again here. And what we can see is that when the market with this impulse to the upside broke above the zone, all this previous resistance was turned support, because what we know is that in the market, previous resistance, once it gets broken to the upside, becomes support. The market has in fact actually retested that previous monthly resistance turned support here, respected it as new support, and started rejecting it to the upside. So in a situation like this, from a monthly perspective, we could expect more potential bullish continuation to be created. Dropping down on the weekly time frame, what do we see? Well, here on the weekly as well, we can see how quite strong structure was created exactly at this zone, which was acting first as resistance here, then was broke to the upside with this impulse, and at that point started acting as support. It was respected as support here, again respected as support here, and it was just tested a couple of weeks ago again as support here. The market started rejecting it to the upside, and in a situation like this, you would expect more bullish continuation, which is in fact exactly what this market is currently creating. So in a situation like this, also from a weekly standpoint, we could expect more potential weekly bullish continuation to the upside. Dropping down on the daily time frame, what do we see? Now, from a daily standpoint, I did speak about gold quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect a rejection to the upside. Then again, after this impulse and correction just a few days ago when the market was here, I explained all the reasons for which we could expect this rejection to the upside. And again, that is exactly what the market gave us. And by the way, you find those previous analysis linked in description, so you can go and check them out for more free education. Now, continuing with the analysis here, from a daily standpoint, it is quite clear how we have a very strong impulse to the upside. And after an impulse, what you would expect is first a correction and then more bullish continuation, essentially for the market to establish a clear uptrend. And in an uptrend, you expect the market to create new higher highs and higher lows. So in a situation like this, we could expect first a correction, then the creation of a new higher low, and then the creation of a new higher high, higher than the previous high, which is essentially already what the market has been doing so far, because we had a new higher high here, higher than the previous one, and a new higher low here. This one here is clearly higher than this one here. So the market is already in an uptrend from a daily perspective, so we could expect more potential bullish continuation. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 and 50% Fibonacci retracements lining up exactly in this area. And if we extend this area to the left, as I just did, we can see how we also have previous daily resistance turned support exactly at this zone, because from here, both these rejections to the downside were created. Now the market broke above that zone. So this previous resistance is now turned support. So actually we have confluence of support at this area because we have both the 0.32 and 50% retracements and the previous horizontal resistance turned support, all lining up in the same area of price, therefore creating confluence of support. And inside of a confluence of support area, you would expect more institutional longing. So if the market will correct to this area, there is a good probability that institutions will continue adding longs on gold, therefore increasing the probabilities of a potential rejection to the upside away from this area. Now, speaking about institutional longing, let's go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing. Now, what we can see is that net positions have once again started to rise. We went from having 131.1k net positions up to 140.2k net positions and now 141.6k net positions. Now this shows how institutions are once again moving back to the bullish side for gold. So they expect gold to get stronger, and there is a good probability that they will continue adding longs on gold, especially if the market here will correct to this confluence of support area. So if the market will correct to this area, what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. And by the way, make sure to go and join my free Telegram channel, which you find both on the screen and also in the description, so you never miss new updates. Now, as I was saying, the monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. But when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, if the market during the retest would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential push higher, completing this daily impulse correction and impulse pattern to the upside.
Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.